Hello, welcome to Money, Stocks, and Economics. This is other share I want to analyze with you. Is the share of our project of best stocks for 2025, and this NRP, Natural Resource Partners. This is a company that produces their income comes from mostly two things. They have a large equity in Siscan, Wyoming, who produce soda ash, and they have 30 million acres of mineral interest. So what they do? This is an interesting company because they don't participate in capital expenditures of the production of the minerals. They are royalty based company. What they do? They own the land and they lease the land to 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 companies that wanna mineral them and take part of the royalties. And their profit comes from royalties and the low risk operation. But they are susceptible to fluctuations of the commodity market. So let's see. As they have this core business is the mineral rights, was I was saying, and the extraction of the natural gas. They have the mostly coal, use coal a lot, and they have soda ash on their land. uh, the part of the soda ash, they have a partnership with Siscan, Wyoming, 49% equity participation. Is they say is the world lowest producer of soda ash. The company natural resource for the structure of the business they create are very low cost earning company. Let's see, I will show here. As we can see in the income statement of the company, they made almost 300 million in revenues, but their variable cost is 18. Why is that? Because they don't participate in the operation. They don't put machinery in the land. They don't extract. They don't contract employees. They don't use chemicals. They are not in the manufacturing part of the process. They only collect the partnership with the royalties. They only collect part of the money. So their costs obviously is very low. Is the administrative costs of the operations, the leasing, and the other costs are very minimal in relates to how much money they make because they don't operate. So as we can see, the fixed cost, the operational cost, is greater than variable cost. That proves the company doesn't do the operations, the part of the operations. As we can see here, most of the fixed cost is selling, administrative, and marketing. The the, the salaries of the executives, the people who work in the administrative parts of the company. So maybe they have another expense, share expense with the partnership with Wyoming, but it's a minor representation, so very low financial risk to the company. The company not always used to work like this. Uh, in in 2015, they were struggling a lot, as we can see for the financial reports, and they changed the philosophy, and they were dealing with 1 billion and a half million in debt. But this changed. They changed the philosophy and starts to do a turnover in their company. As we can see here, the company started deep down in financial troubles of 2015, the lowest, and then they changed the philosophy to a royal based company and lowers the risk and get rid of the leveraging, and it starts to go up and is undervalued. because of the crisis they had and the amount of the decay of the share, the price go down a lot, but it go down a lot more than it should, as we can see from the 15 to 24, 700 upway. Why is that? Because the company is a good company now, with the new philosophy, low risk, making money. Of course they are. If we zoom in the graphics, we can see that is this oscillation of the commodity prices, this oscillation of the commodity prices, but it's not uptrend because it's undervalued. It's a very low risk company. They don't usually do as consistent profit because they are exposed to very different type of commodities. I will show you here. Soda ash. Soda ash has been very consistently not a big swinger here, but it's been a downtrend. So the stocks get punished. In 49% is the equity in Wyoming. So as they own Wyoming, 49%. As the soda goes down, their shares dry up or goes down with it. Coal, other thing they produce, in a downtrend as well, as we can see here. Coal in a downtrend for the last 5 years, because as I said in the other video, the oversupply, when the prices are high, tends to keep the prices low until the market regulates itself in supply and demand. So as we can see, all the commodities they are selling are under the average, right, or in the average, but you will turn up as the supply and demand regulates. And this company is in a great position to capture these profits. I think the shares is so cheap because they had that problem of 2015, and they were a large drop. The share was in 354 and down to 7. This tends to get people scared. In less than 3 years, the stock just melted. Once is because it never value, well, had never had this value in real terms, in valuation terms, like a Ben Grant analysis, value invested was never that high. So as the euphoria of the market goes down, the shares go down, but it did go down way more than it should, to 12, and now it's going back up to the real value, and now it will stabilize further. But for now, it's very cheap. Not very cheap, but it's cheap. You can do 100%. It's worth 160 easily. We don't know when, but his value is 150. It can, as we can see, has been doing since 2020, increasing very large free cash flow. Their investing is very low. Their capex expenditure is in existence because they don't work they only lease the land. They don't work on it, so the capex is, so the pure profit, the money that the other companies that leases do, they pay rent and they pay a part of the royalty. Why? Because it's a division of risk. It's like doing a hedge against. If the company who lends from them lends full value, if the commodity price goes way down, they still have to pay the lease, so they can get in financial trouble. And it's always obviously bad. But when the company when the company do a hedge with the price of the commodity they were selling, especially in natural resource partners, they sell three types of commodities. As the price of the commodity right here goes up, right, they can share the profits and reduce risk. And when it goes down, the same thing. They can share the losses with the company they are leasing and earn a little bit less. As all the commodities they sell are in the downturn, that make the stock drag up. The stock is not showing their value. They are sidelining. But as we can see here, with the movement of the commodities, it tends to go up, and it will go up as the commodities prices, supply and demand, as I was saying, realizes. When the supply and demand regulates and the commodity prices it stops to go down, as we can see here, they're starting to go up as well, because people, depends on the commodity, but people cannot extract as cheap as they used to, and they oversupply, they over extract to to capture the profit from the disruption in the supply chain. As they capture the profit, all the players who do work in the type of businesses oversupply, overproduce, then is an oversupply and the prices drop. But they cannot sell as much and extract as much as this price level, so they tend to hold down. They produce less or don't produce at all. In the weaker players in the market for this industry got lay off of the industry, because they have financial troubles, they not a stronger balance sheet, so they been pushed out of market. So the supply of the commodity got scarce, and the prices tends to go up. As the prices tends to go up, companies that undervalue and have a stronger financial balance sheet go up as well, and this is the case. Very low risk company, only makes always make money, after the restructuring, always make money from leases. And when the company that leases from them are doing good, they are doing great. So cheap, low risk, no financial debt, no costs, no interest payments, no capital expenditure, only free cash flow, and the contracts. The land is there, they have the contracts for a very long time. The companies who manage to extract from their land are good companies. They have an equity interest in almost all of them, but being Wyoming the most significantly in soda ash. So the company is very good. It's very very good company, and will show their value in the next 2 years easily. Just as these economic trends tends to regulate. Let me do a comparison here. Like, all of these selling soda ash, natural gas, and coal. As we can see, all of them is in a downturn, as I was saying, in the last 5 years. But this will not be sustained. It's already going up, some of them, right? It's a cyclical market because of oversupply, prices go down, people out of the market cannot extract as much, scarcity, price go up, oversupply to capture the profits, price goes down. Is a well-written game. If you buy a company in the right time of the cycle, and the company is undervalued, that is a important part. If you buy a company in the right time of the cycle, but the company is overvalued, the share tends to go down because it's overvalued, and will not go up as much because it was too much. It was pricing at a larger, so we'll make a larger profit. You will not make the stock go up as well if it's overvalued. But if you buy in the right time of the cycle, the down cycle, and the company is undervalued, then you can make a large profit, because the amount of free cash flow and profits that will make the market realize the company is undervalued in the next cycle. So if you buy earlier than the realization of the market, you can do a large profit in commodities. So that's our second bet. That's our fourth bet. Sorry. I will do shorter videos with one stock at a time. The other one was too long, and people don't have that attention span as long as well. So I will do one stock at a time, and this is our great bet. As I said, when the company's dailies are doing great, they are doing awesome. When the company dailies are doing bad, they are doing good, because no risk, no leveraging. Just, it's like having a apartment that your leasing person pays part of their salary to you as a royalty. It's basically it. No risk for you, just the maintenance of the low maintenance of the land, making contracts and administrative people, and every time your I don't know the term in English, like the contrary of landlord, the people who lease the apartment earns their salary, they pay part for you. Is a great business. Wyoming, what they have 49% equity, is a great business as well. So this will make a kicker, and the stock will go up as the commodity prices settles down and starts the up part of the cycle. This will be a good investment, I'm sure of it. Thank you. This is my opinion as well. Thank you very much. The next video is other two companies. I will do as they separate, and thank you very much. See you in the next.